Recording in progress.
Yeah. Good morning. Yeah, my name is Fion, who is the Channel Partnership Director at Strands. I'll be the moderator for today's webinar, Driving Digital Growth by Creating Personalized Customer Experience. Personalization is no longer a nice-to-have for retail and SME clients. They expect to receive right products at the right time. So digital transformations and also how to enhance the user experience are the key for the banks to adapt this change in order to meet the customers' needs at the same time to drive the revenue growth. But what is digital transformation? How does customer experience drive digital growth? What are the current challenges of the banks and how to solve those challenges? So let me invite the three experts on stage to share their experience and knowledge. Our first speaker will be Emmanuel Erica, the founder and CEO at Nanogon Technologies. Our second speaker, Victor Asayami, the Group Head, IT Governance and Strategy at GT Bank Limited. Last but not least, we have Craig Harris, the Sales Director at Strands. All the audience will be muted, so if you have any questions, please feel free to type it in the chats. We will have a Q&A section at the end of the presentation. So let's start our webinar. So I pass the stage to you, Emmanuel.
Okay, thank you so much, Fion, for that warm introduction. And a very good welcome to our audience this morning. So my presentation is going to be on digital transformation, which is a major prerequisite for any enterprise looking to scale its digital initiatives. So the topic for this webinar is about driving digital growth. And to achieve digital growth requires some level of internal digital adoption, and hence why the focus is on transformation this morning. So our current digital experiences are derived mainly from business disruption that's happened over the course of the last few years. And this has actually reshaped the way we think, how we engage with our customers, and also the way we engage with our banks. This has all changed in the last few years. In fact, these new digital experiences actually recalibrate the way we engage with one another and also with other organizations that we have or will do business with. So the impact of innovation is evident in most industries you go to, be it banking, be it oil and gas, be it government, there's some kind of disruption going on. So the stark reality is it is here to stay. So one of the vantage points of this new phenomenon, I think, is that it not only allows you to build digital experiences across board, but also it allows you to reach out to customers and consumers in far-fetched places, and this wasn't possible just a few years ago. And this leads me to the main core of my presentation on digital transformation. Okay, so I'm going to start off by going through the highlights on digital transformation. So I will talk a bit about the phenomenon itself. I will talk about the spectrum, which encompasses different components within the organization. And I will then move on to the benefits and complexities of transformation. And then I will touch on digital maturity, which differs for different organizations, including the banks. And then I will now move on to the intrinsic value of data in achieving competitive advantage. And then finally, I'll be rounding off with how data and statistical models can be leveraged to generate more business value. Okay, so just a quick survey that was done, sometime last year, I believe, on over 100 bank executives, and then the question of transformation was asked, so 94% of the executives surveyed mentioned that digital transformation is one of the three most important factors driving the bank's growth strategy. And 42% confirmed that providing a better service to customers is actually their bank's main priority, when investing in new technology infrastructure. And then 79% confirmed that their banks use some form of third-party technology solutions when it comes to digitalization. So it's not all done in-house. I have some figures from a company called ACI World Group. They generated a report on the effects of transformation on the Nigerian economy. It's interesting to note that by 2026, Nigeria as a country would have benefited in the tune of $6 billion from an additional GDP growth, to the country. And also, there is been a widespread uptake for digital products. In fact, in 2021, the total payment services unlocked by digitalization was in a tune of $3.2 billion in Nigeria alone, recording up to 3.7 billion real-time transactions across different payment platforms. And this now made Nigeria an enviable country, being able to be ranked as the sixth fastest or largest growing country when it comes to digital payments, representing just under 1% of our GDP. So let me now go back to the base of my presentation. So what exactly is this buzzword people keep talking about, digital transformation? So I would like by defining it. So it is essentially the realignment of your business structures, which includes the deployment of various technology tools to achieve significant growth in your business, and in your internal operations. So generally, it is really about redefining how an organization communicates both internally and also with stakeholders outside the organization. Another definition for digital transformation is that it is really the integration of multiple types of technologies into the very specific business areas within the organization to allow them achieve growth and to operate more efficiently. It is worthy to note that transformation is really a spectrum. I call it a journey. It's a journey where you can actually start off small and grow over time. And then some organizations start off by making subtle or modest changes to their internal structures, be it optimizing processes within the organization, or actually enhancing the automation process within certain departments. While some take a very radical approach, actually, where they make a change to their entire business model. So the way the bank creates value and the way the organization actually captures that value is actually redefined. And this reflects also on the operating model of the organization. So some take that drastic step and then they build a strategy that drives transformation top down. Okay, so here are some of the benefits of embarking on this journey. So one, it improves customer experience, and two, it increases productivity across different areas, which includes process automation. It allows organizations to attract talent, particularly tech talent, and also it expands the possibilities for multiple business opportunities, once you have the right changes in place. And then with data and models, a lot can be done with generating insights to better serve customers. So for me, I like to follow multiple paths to transformation. It's not the same for the organization. For me, I see it as three distinct phases. The first phase is really and truly, it goes back again to your business model. So what essentially are you trying to do? What sort of business line are you trying to get into? So this might need some kind of competitive landscape analysis to understand what's your competitors doing in the space, who are the fintechs coming into your turf, and how to actually address these threats coming into your organization. So it starts really by defining the very method or the very area you want to focus on as a business. And then from there, once that's done, it's important to move on to driving this through executive management, because oftentimes with transformation, it involves significant changes across the organization. Like I said earlier, it impacts on people, it impacts on processes, it impacts on structures. In fact, it also impacts on the culture of an organization, which is very powerful. It's not saying, but it's a force which actually drives an organization in a particular direction. So to make such significant changes, this leadership it's required right from the top downwards. And then so once that's done, it's important to be able to set clear achievable goals, and then obviously to secure the budget for such initiatives. And then the second stage would be to start off, on this project, maybe start off with low-hanging fruits, to build confidence within the organization and to win management support. And then put together, a very robust team, maybe in-house or with consultants on the outside who have deep experience in this space to help chart the way forward to the target state the organization is looking towards going. And then the next stage will be to build certain agile methods for working. Oftentimes in the past, a lot of companies, approached project deployments using the waterfall model. And, where for years, a project could be ongoing through the life cycle. And, by the time the project is over, it becomes obsolete. But with agile, nimble ways of deploying projects, you could have iterations coming out every couple of weeks. And as the changes occur, those iterations are also modified. So like I said earlier, culture is important. So it's important to imbibe that digital culture in the organization. And the third and final stage will be to scale up, So once you've started the foundation, you've built some kind of base level changes in place, and then you now start to build on top of what's on ground. So that way there's confidence, and then there's support from all angles. And then next will be to move on to building capabilities and then deciding on the operating model for the organization. So this leads me to my next point, which is a concept, a framework which was put together by a gentleman called Michael Wade. Michael and his team at IMD Business School surveyed a few organizations across multiple sectors to understand the real impact of digital disruption. It was interesting what they came up with. Like the natural vortex, they were able to understand that some organizations within the vortex are actually pulled right through to the center of that vortex. So in the course of the next 5 years, certain organizations are going to be significantly disrupted. And those are the ones within this red axis. So if you're in the business of technology or product services, you're in the business of media or entertainment, you're in the business of retail or financial services, including the banks, disruption is inevitable and it would happen faster than you think. So the organizations or the sectors in the yellow spaces are the ones that would be affected, in a modest way. So the vortex, as explained by Michael, is that it pulls objects being industries, right from the peripheral of the vortex and brings them right to the center of the storm. And that's where you either collide or you don't, or you survive by making changes. So, so part of the research they carried out was the fact that the change is inevitable. So this force, this movement would happen to every organization, and it will happen with some of them than others. And like I mentioned earlier, it was likened to the fact that you have objects at the peripheral, which are moved across, and sometimes they collide. And then ultimately, it's either you survive by redefining the way you do business, or you sink. So I just want to talk a bit about the pandemic. It's interesting that the pandemic exposed the vulnerabilities faced by so many organizations. The pandemic, for organizations that were digitally mature, which I'm going to go a bit more into in a minute, they were able to withstand the storm of the pandemic. In fact, a lot of them thrived during the pandemic, while others that were less prepared, less digitally mature, actually struggled. You could see that still happening up till today. So this leads me to the definition. What's a mature organization, a digitally mature organization? So as a definition, it is an organization's ability to take on digital transformation projects from the standpoint of technology, but also looking at it from a perspective of the business. So it's not just about tech, it's about the entire business as a whole, having an impact on the people, how people engage with suppliers, customers, and also how different departments in multiple silos consolidate and work together. So it also refers to the organization's ability to quickly pivot, when there's a problem. So organizations that were ready before the pandemic, they were able to immediately pivot to move to using digital. Some of the companies that I know of, including GT Bank, which is arguably one of the leaders in terms of digital maturity with the banking, is that when the pandemic hit, they were not as affected as some other organizations also going through the transformation journey because they started early. Okay, so on average, we have about 53 banks in Nigeria and Ghana, put together. So I think we have about 21 in Nigeria. So there's 53 in total, 21 in Nigeria. And I know that the digital maturity levels for each one is totally different. You have some that are still at the infancy stages, still trying to consolidate silos, bring about a unified way of working. And while you have some that are already very digitally mature, in fact, they are actually looking to focus on customer centricity and how the technology changes they've made can be applied to offer customer services in a different dimension. So like I mentioned, some organizations start off by just making changes to their business strategy, while some go through the entire value system, moving away from the silo mentality of working. So no two journeys are the same. So some of the characteristics of a digitally mature organization include customer centricity, which I mentioned earlier, automation of processes. So moving away from the manual, cumbersome, error-prone way of working to automating and generating data from automation and working with that. It goes to efficiency, it goes to flexibility, innovation, operational efficiency, as well as insights. I like to stress on that insight. Insight is key. The more data you have, the more you can personalize that insight, the more value you can generate and pass on to your customers. Okay, so if you look at this diagram we have on the screen, it talks about the three main areas organizations go through when they want to digitally transform. So some crawl, some walk, and some are running. So the ones that are crawling, I would say, are still in the very early stages of transformation. So they might have some digital tools in place, websites, network, being able to push data from one server to another in different offices. That works. But they have minimal interaction with the customer, aligning all the changes, all the assets they have, the data, and trying to put that together to serve the customers better. So they're still at the minimal stage, they're crawling. And then you have the reactive, companies that are working. So they have departments, structured departments, and then within those departments, there are multiple levels of automation going on. But all this is all in silos, yeah? So they work, maybe HR might have some kind of automated systems, finance the same, treasury the same, but they don't share information. They are not together, yeah? It's all in silos. And then you have the moderately mature organizations who now link the multiple departments together. So marketing, so for me, for example, I go to my bank and I ask for some insurance product, and then a few days later, I go to my bank teller to withdraw some money. The bank teller should be aware that a couple of days ago, I asked for some insurance product, consolidation of data. That way it's more personalized and you'll be able to serve a customer much better. And then you have the customers that are running, so there are ones that are very customer centric. They are focused in the way and they're structured in the way they serve their customers. They've been able to centralize all departments, consolidate on their data, apply some cognitive capabilities to their functions to achieve better value for the customers. And then you have the ones that are transformed. So these transformed companies just keep on evolving and making changes as the business sees fit. So I want to go into some information on data. Data is the driving force behind a lot of the automation going on. In fact, according to statistics, big data and analytics is worth about a quarter or just over $250 billion as of today. Just to put things in context. So over the course of the last years, it's estimated that the world, the entire universe generated 44 zettabytes of data entirely. And in 2022 alone, it is estimated by the end of 2022, by December, the world would have generated 94 zettabytes of data. That's almost 50% more than we've generated entirely. So it's no surprise to see that on the chart up there, where it says that by 2025, we'll be pushing about 175 zettabytes of data, across board. So data is going to be everywhere. But it's important to note that it's not just about data, it's about the value of data. Yeah. Data without value, it's redundant. Yeah. Being able to process data, apply some AI modeling and as well as machine learning tools, and then generating value is what makes data of value. So I just want to go through a value chain a typical organization will go for. So first is to collect data. So maybe from your mobile banking apps, you work with customers, your online banking platforms, obviously with the consent of your customers. Collect data, consolidate, process, analyze, then push into the different departments and then disseminate. And then, use that to create incentives, influence your customers, make recommendations, and that now creates impact. So it's from the beginning of the value chain, production, right through to use. So when it comes to statistical models, data can be a fantastic input. In fact, with basic algorithms, you can make certain predictions about the course of the next couple of years based on historical trends. AI powered data can actually handle complexities in real time, to the extent that human function would be unable to handle. So this is actually where Strands come in. Craig is going to talk a bit more about this, on how the consumption of data, in addition to machine learning tools, as well as the AI models, can actually create explosive value for any organization, including the banks. So in conclusion, I would like to say that digital transformation is a journey. It's actually redefining the way businesses operate and more effectively how they compete to generate revenue. Because there's a lot of competition from the fintechs. Fintechs are more nimble, with no excess luggage, and they can easily, with technology, deploy certain tools and reach out to customers in ways that are very profound. So businesses are witnessing a cost savings and increasing profitability as a result of collecting data. So integrating the various, arms of the business with the use of transformation, digital transformation, a lot can be done, but it's a huge task. That is why McKinsey confirmed that over 70% of companies that go through transformation actually fail. I don't think they fail with the use of the various tools, technology tools. I think it's the ability to be able to look at the people factor, make changes in, with the structures, make changes to the culture, and also the processes within the organization, and then integrate this with technology, and to achieve breakthrough. So it's a complex task. So in finalizing, so despite the fact that digital transformation is gaining momentum, I know that from the fintechs coming on board, there's going to be a lot of disruption going on in multiple quarters, but it is here to stay. Thank you. So I would like to hand over to Victor Isiyemi with GT Bank to talk a bit more on his experiences with the digital transformation journey at GT Bank. Over to you, Victor.
Thank you so much, Emmanuel. Thank you for that fantastic presentation. You started well. Okay. Good morning, ladies and gentlemen. Once again, my name is Victor Isiyemi. I'll be taking the presentation on customer experience in the banking industry. Look at the journey so far. Okay, so I'll start my presentation. This will be my outline. We'll look at trying to put a small definition to what is customer experience. We'll look at the role of data and digital transformation. Manad has really done justice to that. We'll look at the journey so far in the customer experience in the banking industry, the rise of fintechs. We look at how customers experience and drive digital growth. What are the current challenges, and we'll conclude. Okay, in a nutshell, customer experience is actually the impression customers have on your brand as a whole throughout all aspects of the customer's journey. This is not limited to just one-off interaction with your platform or touch points, but a collective interaction that forms the impression that customers have about the brand. According to Essential, about 75% of our customers admit they would like a more personalized touch to services from customers. To things like trying to identify them by their name, know their purchase history, and even recommend products to then build their purchase history. Customers do like this kind of personal touch, to service. And like I said, it's not a one-off thing. The customer experience is actually a journey. Starting from the first day, the customer, interact with your touch points, and it continues along the line. So the question is, what impression do you want to create for your customers? Is it the one of frustration when customers call your contact center? Or is it one of great experience when they use your mobile app, to perform basic banking operations? Or is it the one that they, from your online banking, they have, fantastic experience, or the one they have to wait endlessly on, when you call your customer care? So this actually matters. And remember, that first, contact is all it takes to form an impression. Now, the role of data and data transformation. Manuel has really talked about this, and they are really, driving the point. So basically, like I said, it's actually involved in integrating technology, in all of the operating areas of the business. And definitely at the end of the day, it comes out, with some sort of result that impacts on the business of processes, how you deliver value to your customer. Digital transformation is very, very key. Okay. And it also plays, a very significant role in how your customer sees, your business. Imagine a bank like Bank having, about 25 or more million customers. How do they expect to serve them, without these digital footprints? How many customers can be accommodated in their branches, even nationwide? Definitely be difficult to cope. But with this, digital transformation and digital product that they come up with, it helps, in servicing customer. And of course, the value of data cannot be overemphasized. Like they say these days, that data is actually the new oil. It helps you to analyze and understand, the pattern of behavior of your customers as regards your services and the products that you offer. So these are critical things. Now, let's look at the journey so far in when you talk about customer experience in the banking industry. It has not been a smooth ride. It's been a bit rocky. Now, initially, traditional banks were primarily focusing on making their service available for customers. Initially, that emphasis on great customer experience was not there. But these days things have really, really changed. Not beyond just going to the bank to make withdrawals, transfer funds. Customers want they want more in terms of the way they are being served. The customers have become a lot more smarter than they used to be, and look for more value proposition that you have to offer. And it's also a very competitive industry. So you really, really have to know your customers. In the next few slides, we'll be looking at some of the innovations, some of the products and services in the digital space that have been developed in the banking industry. Starting with the account opening. Before now, you need to open an account, you need to visit your bank in a branch to open an account, but that's no longer the case. You can open an account now from anywhere using any of the devices. Maybe be it your laptop, your phone, or a desktop system. Open an account without necessarily having to worry about when you get the account number. Is instant these days, and you do a less data input, leveraging on NIN and BVN. Now, I call this the game changer. This is what we call NIP. This infrastructure, was developed by NIBS, Nigeria Interbank Settlement System. It allows, It facilitates the transfer of funds between banks by customers. And since this platform came on board in the banking industry, things have really changed. It has really facilitated a lot of innovation around it. And customers these days, they have so much confidence such that even to pay for a service, they go there with their mobile phone and simply just transfer to pay for the service because they have that confidence that it's definitely going to work. And it has really done magic in the banking industry. So we also have the card and virtual card issuance. Okay, so you can see what I have on the screen. There's been like a journey, so to say, from online card requests to instant card printing in the branches to virtual card, online. And today we have instant card that you don't even need to walk into the banking hall to print. You simply go there to the machine, which you call a kiosk, any time of the day, put in your account number, you put in, the OTP that is generated and put in your PIN. And at the end of the day, immediately you have your card printed. And it's very, very simple. And that has really helped in the card business. We also have the cardless ATM banking. We started with the liquidity rescue and the pay code that requires you to generate a code from your mobile banking to home banking. And then with that, you can go to the ATM and cash withdrawal based on the amount initially specified. With that, we have also moved into the fingerprint banking, which not only allows you to withdraw, but also be able to transfer money to a third party and also to be able to buy airtime. And this has really impact and create a better customer experience. USSD banking is a household name now in the banking industry. Okay, so with this, initially we started this with a simple, buying of airtime and data, and it has really transited into a complete banking experience whereby you can, transfer to, to a third party. You can pay for services, pay for bills, and almost all the banks, are on it with different short code, as you can see from my screen. The 737 is for DT Bank, 96 is for Zenith, 894 is for First Bank. Again, this is another game changer, instant loan service. Now, this have different names across the bank. The whole idea is that customers can, on their mobile phone, request for loan and instantly they get it. Once you are a customer of a bank, and most of the banks offer this service, okay, you can use your mobile phone to make a request, for a loan, usually a retail loan, and you get it instantly. Citibank calls its own quick credit. Other banks call them payday loans, and virtually all the banks are in on it. It doesn't require collateral, no documentation, requests, and you get it immediately. Fast track is another, innovation that allows you, instead of joining the regular queue in the banks, you can easily use it to fast track and reduce your waiting time. All it requires is the ATM card, and you have a fast track device in the banking hall that you can use to initiate withdrawal and also deposit. Now, yes, the rise of the fintechs. I'm sure we're all aware of the presence of the fintechs in the banking industry. These are companies technology companies that offer financial services, leveraging on innovative technology. In a way, it's like competing with the banks, but I think we've all agreed that the fintechs are come to stay and being able to work together within the system. Right now, as of last year, about 144 fintechs in Nigeria, according to statista.com, and this list is still growing. To tell you how vital, the fintechs are, as at 2001, of the $1.37 billion total fund that were raised for startup, 63% was for fintechs. And that tells you a lot. So the fintechs, and quite a number of them, are all over the place now, rendering different financial related services or the other. You have the likes of Pay, OPay, that do lending and also airtime lending. Remita also does processing of transaction and transfer. And they have Paystack, Flutterwave, and all the likes, InterSwitch, Paga. There's one interesting one here, Strands. Strands, service is a bit unique in terms of leveraging on AI, to offer that personal touch to customers. I'm sure Craig will talk more on this service when, when it's presenting, just a few minutes after my presentation. Then we also have Piggyverse. This, are, fintech that specialize in savings, and a whole lot of them. These are some of the services or value proposition being offered by the fintechs I talked about earlier, from payment to saving and lending. Now, there are quite a number of them in the lending space, that offer the retail lending service. And like I said, is instant, just like the ones of the banks. So we've talked about how customer experience, has helped in growing a lot of digital products. Okay, so how do they help, drive growth? Now, Emmanuel talked a lot about digital transformation that has helped, to drive customer experience. Without, having these products that I mentioned earlier, the online banking, the mobile banking, it will be very difficult to serve customers. These products have become household names such that customers don't need to come to the bank, to carry out basic banking services. From the comfort of their homes, they can initiate and complete transactions. And that has really, really helped to grow the banking industry in terms of volume and value of transactions. I mentioned earlier the NIP. Okay, with the NIP, between 2012, January and December 2018, this service, the volume and value, the value of transaction has grown really high at about 34%, growth. If you can see the data that I have on my screen right now, it gives you an idea of, the Nigerian banking industry e-payment figures for that period that I mentioned. You see that the strings are really, really changed. While some are growing, some, are dropping. Things like checks, a lot of people no longer issue checks because they can conveniently transfer and make payments, instantly. And that has, give rise, to the NIP. If you can look at my graph, you see that of all the growth now, the NIP sticks out because of the experience that customers have with their service. And it has really, really helped to facilitate transactions instantly. Now, despite all the accomplishment and the things I've been able to develop, there are still challenges. Okay, till today, there's still that lack of effective personalization for customers. Now, looking at my screen, you see now, obviously, this individual you might, segment him as a retail customer. So a bank typically will push notification relating to retail to the customer. But does that really address the customer's need? Of all this, is it all that the customer needs? So there's still need for that level of additional level of personal, touch, personal service that needs to be offered to customers so that we can avoid situations like this. In addition, despite all the technology, there's that still issue of data in silos. I think Emmanuel also mentioned that. Now, silos is not really a bad thing all the time, but at times it becomes, an hindrance to achieving that, 360-degree view of customer data that helps in that personalization. Now, what are the things that leads to data silos? As technology grew more and more, banks and other organizations invest in the technology. A lot of the time, they don't just, completely drop the existing technology. So you have integration within the organization of different systems in silos. And that creates, different pockets of personal data here and there, which makes, when you now come to data analysis, having the primary source, choosing the primary source sometimes can be a challenge. So that creates a bit of barrier. It also hinders that, collecting deep, actionable customer insight. Okay. In addition to that, there's additional cost to storage. So data in silos is still a bit of challenge, in the industry. Now, we talked about customer experience. Of course, one size interface cannot fit all, which is what we still have. Although the banks are really tried in terms of personalization, but there's still, more work to be done. In a situation where you are, for instance, if you pick up a typical mobile banking of a bank, you will see all the various services being offered. Now, it's not all customers that, need all these services at the same time, So the way we present services to customer creates that, impression that, one side fits all. This is something that needs to be looked at. In conclusion, I just want to say that customer experience is a journey and not a one-off. Positive customer experience drives loyalty and retention, and retaining a customer is less expensive than acquiring a new one. In addition, I'll take a quote from their boss, Bezos. Okay, now this is a very known name, and he said, "We see our customers as invited guests to a party, and we are hosts. It's our job every day to make sure important aspects of the customer experience a little bit better." Thank you.
Thank you, Victor. Thanks for your sharing and also the practical banking experience that you have. So next one, our last but not least, our speakers will be Craig. So Victor, can you please stop sharing your screen? Yeah, in the meanwhile, if any delegates have any questions to ask Emmanuel or Victor, please try to type it in the chat. We will have the Q&A section at the end. So Craig, pass to you.
Thank you. So morning, everyone. And firstly, well done for everyone who's been speaking so far for not being reminded that you're on mute, myself included in that one. So that's a big thumbs up. So thanks to everyone for allowing me the time to talk today, and special thanks to Emmanuel and Victor for their valuable insight. So my name is Craig Harris, and I'm a Strands director for Strands. Sorry, I'm a sales director for Strands. Now we've heard from both Emmanuel and Victor about the why digitizing your business is needed. But now let's talk about the how. But first, let me give you an overview of who Strands are for those perhaps who are not aware. Strands are a software provider that helps banks attract, retain, and engage with its customers. We combine money management solutions to improve customer experience with artificial intelligence to allow banks to increase digital sales and to hyper-personalize their overall approach to their clients. Following a brief overview of who we are, we'll look at then some success cases from Strands and our existing customers, and then I'll demonstrate how easy it is that we can help your organization. So just kind of giving you an overview of where we are sort of geographically, and as you'll see there, we're not bound by any geographical location or languages. As you can see with the map, we are all over the world. When both Emmanuel and Victor talked about the customer journey and how important this was for the consumer, not just by buying a product from a bank or from yourselves, but also the bank themselves having the right interaction with its customer base and at the right time. How do you go from being a nuisance by bombarding its customers or your customers with needless products, but by having a timely approach? Reframing Victor's points on previous slides, 3 out of 4 customers admit to being more likely to buy from a company that identifies them by name, knows their purchase history, and recommends products based on their history. And when you get that right, you can then help answer that question that was, I think, on slide 19, which one suits me? The future of banking, we believe, is built on trust. The focal points, I think, for all banks are how and where, how to attract and retain, and when to engage. And this piece is absolutely crucial for success. So let's now look at the how and when Strands can help with these common challenges. Firstly, by adopting to a more digital proposition. That's how we help the banks, by tailoring your business to the consumer needs. Engage, we help banks improving the customer journey with our AI platform, which personalizes that end-to-end interaction with the customer. And retain by understanding and anticipating your customers' needs in real time. And that is a crucial aspect. You are enhancing the overall banking experience and reducing the attrition rates by being there when you are needed the most. And let me also mention, because it has been mentioned previously, that if you're not targeting correctly, you will not only have the concern that perhaps your products don't have the right penetration at the right time, such as loans, mortgages, cards, or any other offers, for example, but also have an upturn in client attrition. Meaning clients that are switching banks, it's so damaging for banks, not just for the reputation, but in the overall costs. And I think it costs somewhere in the region of 5 times more to attract a new customer versus keeping an existing one, which is why so much more that's available now for consumers and customers alike. They're more tech savvy than ever before. And it's never been, I think, more important to adapt to the customer's needs right now. The high-level benefits of our personal finance management tool, which I'll refer to as PFM, this increases the bank and client engagement, enabling you to be there when you're needed to help create cross-selling opportunities also. And thanks to our data enrichment, take advantage of a new breadth of data to ingest throughout your business to better aim your products at the right people at the right time, and help create financial well-being offer to help you make you stand out from just being that transactional relationship. We're not just in the personal finance management sector, we're also in the SME sector. And the benefits of our BFM solution, much like in the PFM solution, is that we help SMEs understand the 360-degree financial view of their business, managing incomes and expenses, tracking late payments, suggesting merchant payments with our connective invoicing tool, and again, tailoring your solution at the right SME at the right time, which, as I've mentioned before, is crucially important. Our Engager is the Strands AI platform, which we'll be talking about shortly. And that allows the banks to understand the consumer's behavior, spending and saving propension, to target the right product at the right customer at the right time. And it's composed of over a dozen pre-built insights. Marketeer people from the bank, as well as merchants, can address digital sales campaigns to help boost propositions. And our Engager is unique to the market in the fact that we are purely real-time. And what that means is that from the moment a transaction is taken place by your end customer, that interacts then with our Engager. So there is no need to log on to a device to see those insights. That happens instantaneously. So just moving on to some of our success cases here. With BAC, they white labeled our solution into their My Finances app, which allowed the clients to manage their financial position anywhere in the world. 6 months from launch, their satisfaction score increased to 8.3 out of 10, and with 1.3 million visits to the analysis sections of the application, creating a greater overall well-being offering. With Bank of Georgia, they installed our PFM into its digital platform, into their digital banking platform. And by doing so, they dramatically improved the overall satisfaction score. But not only that, the engagement within the application increased by over 50% in the first year. And a huge success story of ours, like they are with many of our success stories, we have a tier 1 bank in the UK. And 92% of the insights that were created were actioned by the end users. And this particular client had won many awards since going live. So basically creating a conversational banking that I think we all know the market is needing today. With our BFM solution coupled with our engager, Nova Banco were able to get 78% penetration amongst their SME sector, again with a high satisfaction score. So this gives the SMEs what they need when they need to see it. BFM is also a financial generation tool. So way back when, years ago, when we were the first on the market to launch our BFM products, we conducted a survey prior to that in Europe, in mainland Europe. And SMEs were happy to pay banks somewhere in the region of between 15 to 30 euros each per month for having a BFM solution. So you kind of see the value that will add to your own organisation, as well as the information that it can extract out to the end user. And another example that we've got from one of our customers with fantastic figures, but I want to kind of put that into some numbers. So let's say we're talking a conservative 1 million users here. That would be 930,000 that would have clicked through to the insight that would have been sent to them. And 390,000 of those actually viewed that suggested option. And then a further 278,000 would have converted into sales. So that could be a loan, that could be a credit card, any offers from any high street dealers or any external eatery. So you can kind of see how tailoring your solution to the end user is so powerful and gets some fantastic results. So what I'm going to do now is actually look at how a customer or a consumer is going to log in. And in this example, accessing the PFM solution, which is our personal finance management solution, can be done via a mobile or a desktop. I just want to add a comment as well to say that if either of those are not possible, our alerts and our insights can be sent via a text message. But for this exercise, we're going to use the desktop. So once you've logged in, this is the overall financial position of this particular user's account. And in this example, we've used the open banking that's available to aggregate all accounts of this particular example. We can then next toggle towards the top where you kind of see the speedo. We're then going to move to track, which is the next option at the top, analyze, and then plan. And I'll explain those in a moment. So by tracking previous transactions, you can also see cash flow, overall spending, and reviewing on certain days, weeks, or months, which allows you to see holistically where there may be any particular areas of concerns as months or days go by. So you've got a full view of your overall overarching financial position. And again, it's a snapshot of reviewing previous payments, where to, and toggle between income and expenses. And these are tagged accordingly by our categorization engine, which helps targeting further down the line, as you'll see examples from me in a moment. Review scheduled transactions, and this is where you have an overview of subscriptions of what you've committed to, where obviously you can see exactly how much is going out, who you've agreed making payments to in this particular example. And then if you wish, if perhaps you've noticed that you're paying Netflix and Amazon, maybe you can then make the decision of actually cancelling one, because why would you need two, unless you're like myself and you're a little bit greedy. When we're moving across again, analyse where your money is going to better understand your monthly commitments, where you're spending a certain percentage of your money, and for you to be in an overall better position. And you can use this particular section here to create limits of such areas if you wish, such as eating out or fast food. And I'm sure there's some of us on this call, like myself, like to spend too much money on clothes. So there's a widget within this that actually helps you create limits. So then you have an overview of actually whether you're near spending too much, or actually if you've got any excess left over, so you can actually spend a little bit more. And then moving across towards the budgeting plan. So this is where you can plan for holidays, weddings, birthdays, etc., and just create and go crazy as much as you want. But again, just a quick snapshot just to see that this solution is more than just a transactional product. It actually encourages a greater financial relationship between its end consumer and the bank. What we're going to do now, so what we've seen is the end user, the consumer that's going to log in and interact with the bank. What we're now going to see is the engager. This is where the bank users, so the likes of yourselves, will log in and basically be opening the door to engaging with your customers. So once you've logged in, you'll then see an overview of insights. What has been triggered, what has been clicked, what has gone through, your acceptance rate and feedback rate for marketing purposes. Now, insights, we're going to go into a little bit more detail in that in a moment, but again, what we can see here is actually what's working, how successful you are on certain insights. When we move further down that page, we can now see what's been most triggered and least triggered. So rather than trawling through lots of reports, you can make a very quick view of what's working, what's not, and actually then make the suggested changes. When we go into the insights option on the left-hand side, what we're now going to do is actually create an insight together from scratch, so you actually can see how easy this is. There is no need for data scientists. However, if you do have your own, if you're lucky enough to have your own data scientist, then from the data that you gather, you can then be equipped to make insights based on that data. So if we just move together and create one from scratch. So we need to name this insight, and for ease of use and to know who you're targeting. In this case, we're going to use a new loan application. So where we're at now, the demographics page. So if you were looking to target a particular demographic on a particular offering or a set offering, this is where you could do that very easy. However, for this example for a loan, we're going to use a specific certain balance that it is triggered. So it drops under a set value, it will trigger a loan process. So again, for this, we don't need to go into anything else. So we got here products and transactions, and here is where you specify the exact products that the insight is related to and for what transactions. So again, for this example, we're going to send a message to the end user relating to any balance that's under a certain threshold. I've given this example just 50,000, could be any figure. When it reduces under that figure, it's then going to send an insight out to those individuals with a set action, and the action we're also going to create as well from scratch. So this is now where we tailor the message to the end customer by name, by account in question. And as mentioned, what we're doing is tailoring this specifically to the end user. For ease of use, I've just put a name. So we're just going to address this one to a manual. We've added some items in here, so it's picking out specifically what account this message is actually tailoring towards. Very easy to do. Now we need to add the action. The action or the suggested action is what you want the end user to view and potentially take. And again, for this, we're using the loan, but it could be any suggested action for them. So we're going to put in a loans origination process, and all we do by that is by adding the website or the URL required for that particular action. Once that's added, we now get the option of how long would you like that insight to stay live for, and how often do you want to send it. So for example, it could be every month you're noticing a particular pattern of people going way below their threshold, but also how many times you want to see it. And again, tailoring these messages. You may not want to send a notification of, well, any notification you want to send. You may not want to send that 4 or 5 times in a week or a day, but you may only want to send it once or twice. And again, it really depends what you're building that insight for. So for this example, it's quite important to going below a threshold. So we may want to keep this permanently live and have the priority as high. But if perhaps you're creating an offer for a shop, you may want to set the priority somewhat lower and maybe keep it live for 10, 30 days, depending on what sort of the agreement is that you've got with that particular shop at the time. Once we do that, it's done. So all we do is click create, and that will now go live. Simple. So it's taken probably less than 2 minutes. No coding is required, and probably would have been a lot quicker if it wasn't for me talking. So what I'm now going to do is flip straight back to the PFM solution and actually see how that would interact rather with the end user. So top right-hand corner, you'll see a green box with a message sent, and this is where you will see the alerts. And as I've mentioned before, these alerts are sent in real time to a device. But as I'm not out shopping or at an eatery, we're just using the logon just so we can see exactly how this appears and how this interacts with you. So we can see the particular insight there for Emmanuel, reduce balance and a suggested action. So if we click on that, you'll then see an option by clicking a loan. And by doing that, it will send you to an external link, which in this case, we've used a particular loan website for a loans process, but it could be for anything. And this could be for any offers, mortgages, credit cards, eat at a different shop, get discounts next door if you've just been to the shop next door to that. So you can see how easy it is, and then really interact with that consumer, because again, the insights are sent live. So as another example, if you are in one shop buying coffee, you could then create an insight to say, if you go next door and use this card, you can get 15% off, because that consumer has used the card and it's live. And again, this is the important thing, because the insight is sent live, you don't need to log on to see, oh, actually, I've just been at that shop. If I'd have known that previously, I probably would have done that. This is sent instantly live. So this is the relationship that you're building with the consumers. What I also just wanted to touch on as well is when we look back on the engager, you could see how useful certain insights were. On the bottom right of the screen here, you'll see either a thumbs up or a thumbs down, and this is where your customer is interacting with that insight, if it's been useful, if it's not, and this is how the system will learn continually as time goes on. So that's it from me. Very quick snapshot. I think I've been in time, but if there was any questions, please do let me know, and I'll hand over for any questions.
Thank you, Craig, Emmanuel, and Victor for your presentation. I think it's a very good mix and match with the concept and technical things, followed by the banking experience as well as the solutions. So I have a few questions in the Q&A in the chat box. So I think the first question is for Victor. As one of the major banks in Nigeria, what are the main supports you need for the digital transformation journey? So Victor, I pass to you.
Okay, thank you, Fiona. That is an interesting question because you can't do any digital transformation in isolation. You need support. Now, 3 key things, or should I say 4, I think, of course, you need. Of course, you need people, you need the process, you need the technology. Now, these 3 elements, are involved, in the transformation process. They are very key, So you need buy-in from people. You need buy-in. You need people, to appreciate, what you're trying to do, the value proposition you are bringing in, what that new process will bring in, and of course, the enabling technology to do that. Now, these 3 key things are very, very important. Okay, and of course, the culture, the environment. People must see digital transformation as a norm, so to say. Unfortunately, should I say, fortunately for a bank like GT, digital transformation, innovation, these are things that are, are rooted in the culture of the organization. They're embedded. There are various levels, the way the organization is structured is such that innovation is right from, from the least staff, to the very top management. So every team, every unit, every group division, it's like you must have something that you're bringing on board in terms of innovation, in terms of digital transformation. Today, as I speak to you, you cannot come up with a new process in GTBand without being powered by technology. It's as serious as that. So with this kind of this buying, with this having this support of the people, the process and the technology, with these three key things. Now, of course, like I said, the culture, you'll be able to implement digital transformation projects in your organization. Thank you.
Thank you, Victor. Thanks for your experience from the banks. Yeah, and then I have second questions from the chat. Yeah, I think this question is for Craig. So what is the deployment method of these money management solutions on premises or SaaS?
Hi, yeah, thanks for the question. So we personally don't have any preference. We will work with our clients on any method of delivery that they want. So that could be either an on-premise or a SaaS delivery solution. Again, it's all in the, I suppose, the initial processes of having a conversation with how they want a deployment, what control they want, how much help they need from Strands to get that deployed. But yeah, we have no preference. We have many clients that have either. So yeah, it's entirely up to the bank themselves.
Okay, thank you. So for those who want to know more details, please connect Craig and Manu directly. Yeah, and also I have one more question. I think this question is for Emmanuel. In the digital transformation journey, skills to leverage technology is key. So how can we manage skills? Is crowdsourcing and open innovation and opinion in view of the risk? So Emmanuel.
Okay. All right, thank you, Fionn. Thank you, Peter. Actually, I just saw that in the chat. So this question is of twofold. So I'll start with the first part of the question, which is how do we manage the skill deficit, which we currently have, when it comes to transformation. And it's interesting because currently you have a lot of brain drain also, which exacerbates the problem. You have new technologies being deployed. Organizations are finding it very difficult to get talent. When I mean talent with people with particularly machine learning skills and AI modeling skills to be able to drive these technology projects across. So I think personally, for organizations, it's important they can have some kind of plan in place. So for example, they can nurture internal talent, have some kind of employment plan. So given the fact that, yes, you might have certain skill sets in place currently, but plan for what happens when they move on. So when you have junior staff with a plan where you provide some kind of technology or training capability, on a regular basis, building them up to a point where they can actually take over from anybody currently doing certain roles. I think that will provide some kind of redundancy, in retaining those functions when certain people move on. And to the second part of the question, it talks about, is crowdsourcing and open innovation an option to view in the risk? I think that's a fantastic question. Crowdsourcing is a fantastic tool. It's powerful in a sense that you can actually consolidate knowledge from multiple sources and then work on a problem. And also open innovation, which is very contrary to what we have these days, where people work in silos. There's this silo mentality of, let me retain my knowledge within my department, let alone across the organization. But I think that to overcome this, yes, crowdsourcing is an option where if it is managed very well. So for example, if you're going to open up certain challenges within the technology challenges within the organization, you could crowdsource, but it's important to put very, multiple security mechanisms in place, so that these people providing these ideas or working on certain areas are limited, to the functions they can actually provide within the projects, and then for open innovation, I just feel that it's just, knowledge, providing this information to multiple people, making everyone understand the bigger picture, that if we work together, that way, rather than working in silos and retaining or hiding your knowledge, we can achieve a lot more together. I think that way the silos, the walls would start to break down, and then you now start seeing cooperation between multiple units to achieve that common goal of moving the organization to the next level.
Thank you. Thanks, Emmanuel. Thanks, Craig, and also Victor for your answers. So I think we are running a little bit out of time, but still thanks for all the delegates to join at this moment. So once again, thanks a lot for all our 3 experts for this webinar, and also thanks everyone to attending this webinar. I hope it will be a useful section for you all. Thank you. Thank you so much.
Thanks, everyone. Have a good week.
Thank you, Fionn. Thanks, everyone.
Thank you. Thank you, everyone.
Thank you.
Thank you, everyone.
Thank you. Thank you. Thank you.
Thank you. Thank you. Thank you.
Thank you.
Thank you, everyone.
That was actually very. Oof. Open innovation.